There we go. Good morning, everyone. Just going to give it a couple of seconds while everyone comes in. Good morning, Lori. How are you today?
Morning, Lauren. Wonderful. Great to see your smiley face this morning.
You as well. I'm excited for this show particularly because it's going to be, all the Q&A. People are going to be able to ask you all kinds of questions. And so I'm interested to hear what that's going to be like.
Yep, they actually can. And I have a whole bunch of stuff to share in the meantime too. So I got a lot of gems, and I have actually probably more gems than we may even get through in this show. So depending on the number of questions, I might have, let's call it gems to go.
Oh, I love it. We're coining that phrase, everyone.
Yeah, we got gems to go, guys. Come on board.
I'm going to go ahead and start sharing my screen and do a quick introduction. All righty. So again, good morning, everyone. Thank you for joining us. You have joined us for Small Biz Talk, Solutions for Your Small Business. My name is Lauren Simpson, and I am joined today with my colleague, Lori Williams. We are with the SBDC, or the Small Business Development Center. I'm going to give you a quick background as to who we are. We are, like I said, the SBDC, which is a national program with over 1,000 locations across the country. So no matter what city you're in, what state you're in, you should be able to get connected with a local SBDC office. And you want to do that because we offer tons of services for small businesses, local small businesses, at no cost. No cost is great for me. I'm sure it's great for you. It's our tax dollars at work. For the Los Angeles network, which is the network that I represent, we have nearly 10 locations, and you'll see them here on this map. We go as far out as Camarillo and Santa Clarita, over to Pasadena, down to Long Beach. So whether you're in either of those cities specifically or just surrounding cities, please be sure to reach out, and we'll get you connected to some resources for you and your small business. Again, the SBDC, or the Small Business Development Center, offers no-cost business advising. And so you can be connected to experts like Lori Williams, who's just to call her a financial expert is way less than what she is. I mean, she knows, I call her all things money. She's like the guru of numbers, we should say. And so you can get connected with advisors like her, as well as experts in marketing, social media, business planning, anything you can think of, anything that your business may need. We have those resources for you, again, at no cost. And finally, we also offer virtual training. So trainings like the session you are joining us for today. And so we would love for you to get connected with us. Again, those of you in the Los Angeles area, you can contact us at, by phone at 866-588-7232, and then online at smallbizla.org/new client. For those of you outside of the Los Angeles area, americassbdc.org/find your SBDC. With that, I am going to, quickly stop sharing. And then I want to do some housekeeping, Lori, excuse me, before you get started. And so for those of you joining us today, especially those newbies, first off, for those who are our frequent flyers, as Lori likes to call you, thank you for joining us again today. It's lovely to have you with us. And then for those of you who are new, please be sure to enter all questions into our Q&A. Again, Q&A for all of your questions. And then our chat is where I'm going to be listing any links that Lori may reference, as well as just tidbits and information you need related to this show. With that, one last tidbit is that if you are looking to get connected with Lori directly and you are an SBDC client, please be sure to send me an email. I'll list it in the chat. For those of you who are not an SBDC client, be sure to sign up. And once you sign up, after you sign up, send me an email and let me know that you've done so, and I'll go ahead and we'll get you connected. So now, Lori, I'm going to hand the reins over to you. Good
Thank
morning
you,
again
Lauren.
to you.
Good morning, everybody, and thank you so much for joining. Thank you for our frequent flyers that are here, and a special welcome to everybody that's new joining us today. Small Biz Talk is an exciting weekly show where we cover all kinds of subject matter, and we have guest speakers often as well. But what I've done is this session, I'm kind of got to ask Lori, and I'm throwing out a little bit of tidbits and stuff like that, because every once in a while I get so many questions or different subjects that come up that I'm just going to do a show all Lori, probably maybe once a month or so, because I've gotten such an interest in it. And to those who do want to reach out to me personally and have a meeting with me through the SBDC, like Lauren said, please get in touch with her. I've been able to track down pretty much, I think, everybody that has tried to reach out to me with either just a question that perhaps I can't answer in this forum, or a one-on-one meeting to get in more detail. So sometimes what I do is I look through the questions, and I know they're just not appropriate for this forum. It may be confusing because I don't have enough time to delve into the answer. So if I avoid your question, you can always send an email to Lauren, and I will maybe answer it in a more specific addressing in an email. So with that, I've got some slides that I had from last time because I'm still getting questions about it. Then I've got some new slides, and I'll be watching the Q&A if anybody has questions that are about what I'm speaking of or something on a different topic. So once again, Lauren, which I don't know how she keeps up with this, but she throws all of the links in. So right before I go into that, I wanted to let you know that next week we had a special guest. This is another one of those interviews. You know, every time I invite somebody on, I know them because I've worked with them and I know a bit of the history. And I have to say, even as my involvement, I'm always amazed what comes out in these interviews. They're really, really rich content. And this one is a situation where a client of the SBDC, somebody I worked with, had what would be considered the worst thing happen in COVID. You know, she had to basically get out of her lease, all these different aspects that happened to many during the COVID. And I remember it being a very difficult moment for her and for me to feel it with her, you know, go through it with her. But it turned around in such a way to have a positive story. And I really wanted to bring her on and have her tell this story, because outside of COVID, these are things that happen to companies all the time. You know, yes, COVID was the situation that caused it to happen in more mass quantities, but we all know that many companies do not survive. And so this is something that happens a lot. So it's a great story from a financial perspective, but it's also a great story from, you know, what the future can have, what the future can hold. I'm going to go pretty quick through these because this is stuff I had last time. Lauren's throwing all this into the chat. Like I said, she's amazing that she does this. So I'm not going to go in detail on about 5 slides. I'm just going to let you guys know that this information's there. Many people are asking, when do I pay for the EIDL? When do I start payments? This information is about when you start payments. Another thing, many of you guys that know me know this, but for anybody new, let me bring this up. When you see my slides, you're going to see there's a lot of copy, and it even has a little bit of a legal sound to it. And that's because I'm a believer that you have to get information from what I call straight from the horse's mouth. When you see me posting information, it's information from the website of usually a government entity usually. So it might be the website directly from SBA. It could be the website from the Franchise Tax and Fee Administration. It could be from the IRS, because I want you to see the information from these websites. I really urge people to try to limit the amount of information you get from just doing a Google. I mean, you do a Google search, you see ads, and then you see different people's opinion. And now it could be a law firm, it could be a CPA, but a lot of times what happens is they may be writing to a situation that's not yours. And to be quite honest, they could be incorrect as well. I've read so much that's just incorrect. And then I've seen people get information from sources like Reddit. You know, you don't get financial IRS information from Reddit, okay, guys? So you want to go to the government websites as much as possible. And I try to go there and then explain what it means as well. So I just wanted to say that because the next slides are all going to be from the government websites. So this is from the SBA website regarding the deferred payment. I just want everybody to know that you can still get an EIDL increase if you already have an EIDL loan and you've not reached your borrowing capacity. I talk a lot about what to do when you're requesting EIDL increases. If I get some questions, I'll go into detail, but this information is all about that. This is the customer service for the EIDL loan. Calling on Saturday usually works best. This is if you have a loan and you're going through a situation where you're selling the company, you're transferring, something needs to happen specific to that EIDL loan, which will entail a certain amount of companies throughout, the time period. These are 30-year loans. So that's where you would reach the SBA in these unique situations if you're in that type of situation. This was my reminder to people. If you were using AB5, you started an LLC and you did not have to pay the $800 franchise tax fee in your first year, it is now payable. Don't miss paying it. It's a link to where you pay. And if you are planning on dissolving the company, make sure you dissolve it correctly. Once again, I'm going fast because I went through this last week, but if I get a bunch of questions on any of this, I will slow down, go over it, or even do a whole session on it, okay? Now, here's some new just tidbits of information. Let's talk IRS. Not all this is going to pertain to people on the call, but I just wanted to give the information out. A lot of people don't know that there is free IRS programs to help taxpayers prepare and file returns. These exist, and they are for people who generally earn under $58,000 or less, and also for tax consulting for the elderly. So I get asked that sometimes. People have said, I didn't have the money to file my taxes. Well, if you don't have the money to file taxes, commonly you're not making a lot. So I wanted to research this information and find it out. Now, I have no experience with ever using one of these services, guys, so I can't speak to that, but they're available to you. And if you're in that situation, I want you to know about it. So this is where you would go to find out more information. Speaking of IRS, I know a lot of you are filing taxes on your own. You're handling it on your own. I usually suggest, if you have a business, because it can get pretty complicated, that you do seek out somebody that's able to assist you with it. But nevertheless, I want to get you some resources. So in the upper left-hand corner is the links to every one of these. This is just a screenshot so you can see what I'm talking about. So there's a tax time guide, and this just kind of walks through different things to consider. And by the way, I went and recently went through my, my enrolled agent exam. So I just passed as an enrolled agent for tax preparation. And what I'm learning is that I now get access to all these IRS information. I get an email from all these different bulletins and stuff. I had to first get used to the IRS emailing me on a daily basis. That was kind of a new thing, okay? But that's where I'm getting all this information that I'm sharing. Is I'm going through all of these emails that they're sending me, and I'm picking and going, well, you know what? People could benefit to know this. People could benefit to know this. So by the way, that's where all this information is coming from. I picked through my emails to say, what could you guys benefit from? This is another thing that I thought was really important. What happens is, this is a tax calendar that the IRS has on their website. You can choose any date, and then you select the date, and it highlights what is required for that date. Okay, so I chose March 15th because March 15th is when S Corps need to file. You can see right here in the middle, that's when S Corps partnerships, when they have to file certain documents. So I get questions, when do I need to file my document? When do I need to file my taxes? When's the deadline? What's the due date? This will give you that information. You can pick any of these days, and it highlights what is due at that time period. So I just used, once again, guys, this is just a screenshot to explain what I'm talking about, what's on that website. And then I also chose April because that is when you actually are filing, if you're an LLC or your personal taxes, etc. It's usually April 15th. It's been extended because the 15th on a Friday, so it's April 18th, which is hilarious because my tax returns are due on my birthday. So I don't know if I like to coincide with the IRS, but anyway, April 18th is the date. I'll know it for sure. I won't forget it this year. So that's a great thing, is to go on this calendar, especially for some people who want to know when's the 940, when the 941's due. Excellent resource, guys. Just bookmark that and go to it to make sure you're following all regulations. Okay, so that was all my IRS stuff. So this is a listener question that was emailed to us. And I'm going to read the question and shout out. I know you're listening there. I'm not going to mention your name unless you want to put it in the chat and say hello, because I didn't know if you wanted me to share, but I got your question here. So the listener question was how to make assets and depreciation work for you. Why? Because our CPA said we need a large asset to lower our tax bill. How does that work exactly? Would purchasing real estate like a mixed use building or purchasing our own rental property under the company name be a good idea? Why? Because I kind of sort of understand how depreciation works, but I just know I'd learn and understand more if you explained it. So first of all, thank you for the way you worded the question. Let's hope that I can get this to you in some kind of clarity. So the first thing I want to tell you is depreciation is a deep topic. It has a lot of angles to it, a lot of aspects to it. So I'm not going to be able to answer your question in every single capacity in this, but what I can do is I can bring up enough information about depreciation so you have an understanding of what it is. So once again, I gave a IRS website. This is where you can learn about depreciation, and then on that site you can see where there are publications for specific depreciations. So right here is just a little bit of information about where you can go. So let's first say, what does this mean when they said, why would depreciation lower your taxes? Why would that be? So let's see if I can make the PowerPoint not move and blow this up. Sometimes when I touch it, if I don't touch it right, it doesn't blow it up. So guys, what I'm looking at here is a Schedule C. A Schedule C is the form that you would use to file your taxes if you were a sole prop or an LLC, okay? So what you're looking at here, where I want you to focus your eyes, is part 2, where you have an expenses. Now notice that part 1 is your total revenue, okay, minus your cost of goods to produce, and then part 2 is all your expenses. And as you scroll down, net profit or loss is on line item 31. That's where it's going to be the amount of profit that the company made that is then subject to tax as it passes through to your personal, okay? The thing you want to see is depreciation and section 179 expense deduction. So you can see, just like advertising, just like rent and all these other expenses, it is subtracted from revenue, okay? So we can say, well, what we know right now is depreciation is subtracted from our gross revenue or earnings on our tax return, therefore lowering our amount of net profit, which basically lowers the amount that's subject to tax. So that's how depreciation is lowering your taxes. Now, if you are a S Corp, let's see if I can do this. Yep, okay, I'll come back here. Right here, you can see depreciation is on line item 14. So either type of company, any type of company has the same concept. It just shows up differently on a form, okay? Now, what is depreciation? Right from the horse's mouth, guys. I took the IRS pages and I brought some of the copy they wrote, because I would rather read their copy and explain it so you get used to the language. So you generally can't deduct in 1 year the entire cost of property you acquired. Say that I, had revenue of 300,000 and bought a building for 450,000. I can go, oh, minus 450,000. Look, I don't owe any taxes. I bet you think IRS isn't going to let you get away with that. No, you can't. You can't take this as one lump sum, right? So instead, you do what's called depreciation. And all you're doing is you're dividing that cost of that property over a certain number of years, which IRS has this rule book on how many years, and you take that off little by little by little by little until it's fully depreciated. So all you're doing is you're subtracting from that line item I showed you a minute ago, a little bit each single year, and therefore you're lowering your overall revenue with that expense, therefore lowering what's adjusted for tax, right? So depreciation is the recovery of the cost of the property over a number of years. When it becomes fully depreciated, you have now equaled in each year, it added up to the total cost of that, whatever it is, property, equipment, right? So you basically deduct a part of the cost every year till you fully recover its cost, okay? So that's what depreciation is. What can be depreciated? So this is a rules, and Lauren will put this into the chat as well. These are, once again, right from the IRS. So these are the rules. It must be property you own, and it must be business or income producing activity. So we're not talking about personal here, guys. We're talking about business. So the answer to the first question, yes, it has to be through your business. It must have a determinable useful life, and it must be expected to last more than 1 year. And there's a lot more that goes into this. Like I said, I'm giving you just a high view, okay? This is just a big view of everything. But this is just the general of what can be depreciated. Once again, another link right to a IRS website that talks about this more. I know somebody's going to ask, can I deduct a computer? Well, the answer is yes, you can, but there's once again, there's a whole consideration on it. Of course, the computer has to be more than 1 year. It has a aspect where it has to be part of Section 179. That's a certain section of rules within IRS that identifies how much you can deduct per year. You can deduct up to $1,050,000. It's got other rules about it, right? And what I've done here is I've got the link below to get the whole answer. So yes, it could be a computer, it can be software, because I know for many companies that really is their only big purchase, but it's got to fit within a certain, guideline in order to do it. And that would be a whole lecture within itself. So really the answer to this is that yes, depreciation can lower your tax. Now you know how, because it's treated like an expense. You identify it over a time period, and that's where you would get that amount off your taxes each year. But here's what I want to end with, guys. This is the common sense discussion. Although everything I said is true, and if you are a company that has a lot of extra cash flow, you got cash in the bank, you got cash flow, okay? Then you might say, well, I've got extra cash, I really want to lower my tax bill, and I like to look at it, and I plan on buying this anyway, okay? I don't believe depreciation is something you do just to lower. You buy things just to lower, because if you're buying something that isn't part of your business plan, isn't a revenue generator, isn't going to create revenue for you, or is using cash you don't have, this is not a good decision. So sometimes a CPA may answer the question by what will lower the tax bill, but is that the best use of time or money? I meant to say, is that the best use of money? So take everything I just said with a grain of salt. If you're buying it anyway, that's how it works, but you have to have it make sense business wise. You have to make sense cash flow. You take in it, you insert cash flow, or you use up your credit line, or you get yourself in a debt to equity situation in your company just to save some on your taxes next year, that's not doing you much good. So you really, the first question is, what is the business model? What are we trying to achieve? What would be the return on investment? Do we have the cash available? Are we properly using up our credit line? There's a million questions that you must ask before you get to this point of answering that depreciation is the solution for you. So there is the answer on depreciation, at least enough to have an awareness of it. Okay, so now we've got some questions into the chat, or I'm sorry, into the Q&A. Sorry, Lauren, chat you in the Q&A. So I am going to kind of pick at a few here, and sometimes what I have to do is I have to take a second to read them first, so then I can read them out loud. Okay, so the EIDL advance forgivable. Is the EIDL advance forgivable? Yes, the EIDL advance is forgivable. It was a grant, okay? So I don't want to use the word forgivable necessarily. So what I'm going to say is the EIDL advance was a grant. Now let me first explain what the EIDL advance was. When people were applying for an EIDL, and if you go back to really where it came about, because that probably is the easier way to understand it, when they came out with the EIDL loans, they didn't, it was taking a while to go through the underwriting, getting money out, and they just wanted to get money out to people. So they came up with the grant part of the EIDL, where they said, if you have an employee, which you could be an employee of your company, you would get 1,000 per employee. And so people got money in multiples of 1,000, right? I think it was up to 10,000 if I remember. This is kind of old news here, so if I can remember, that part was a grant, so it wasn't forgivable in the fact that you got it, you had to use it, and then they would choose to forgive you like the PPP. It was more like, this is a grant and this is money given to you. So that part does not need to be repaid. Okay, that is a grant, and for internal accounting purposes, you want to put that in other income on your profit and loss statement. And I suggest that you label it EIDL advance, because that way, if you have a tax preparer, they see that and they understand that that is a grant that you received versus the EIDL loan. Okay, so that's the answer to that one. Let's see, I'm sorry, I'm going through a couple different parts of this question. The Cal Grant assistance that was provided last year, and I'm assuming it's down here, it means the California Relief Grant. I think those two come together. Yes. Yeah, I saw like two it was pieces of the conversation, so I had to make sure I'll get. Okay, so guys, I'm back on. The California Relief Grant that you received as assistance last year, do you have to claim it as income, or is it going to be considered like the PPP? So once again, we're talking about the California Relief Grant. So guys, this is the knowledge I have to date. So I want to say it this way. So what happened, and if you will, just bear with me a minute. I'm going to answer the question about the California Relief Grant, but I want to come back to the PPP for a second, because even the question says like the PPP. So I want to go over what kind of happened in IRS, federal, and California state when we consider whether it's income or not. Okay. So first thing, I want you to understand that there are two different rulings on each of these situations. The IRS makes a statement about whether it is income, taxed as income federally, the IRS. They can make a statement of whether the deductions that you took for like the PPP can also be taken as deductions for the IRS. And then the state of California is going to answer the exact same questions. Okay. So the first thing for some people that don't understand is there are two different decisions. Now, ideally, obviously, it would be great if we decided together, because otherwise it'd be confusing, but they decided some things together, they decided some things separately, and they decided them at different times. Let me explain. So with the PPP, the IRS came out and said, okay, it is not going to be taxed as income. And then the expenses that you used, your wages, your rent, whatever you use for the PPP, they can also be deducted on your taxes, federal, your IRS taxes. State of California eventually moved to that exact same agreement, but they did it, don't quote me on this because all this is so history, but I think it was about 5 or 6 months later. I think California came around about November of the year before, right? So they eventually agreed that it is not taxable income and the deductions of the expenses was acceptable, but they were a different timing. Now, I seen a couple people who filed their taxes on their own. So I always have to look at the calendar to figure out what date it is. So that would be the 2020. And they didn't realize that California had also agreed on the same concept. And so they didn't deduct the expenses and had to do an amended return. So I want to say that about the PPP. So they both were in agreement. Now, the California Relief Grant. And once again, if anybody out there has different information than me, this is what I have so far on it. And everything always changes and I have to research. So keep in mind, I'm giving you the best I know to be true today. I wanted to know, because I was asked just like now, is the California Relief Grant, is that taxable? So what I did is I first went into the California government websites to understand this. Ironically, I went on the California Relief Grant website and it said it was taxable and documents were going to be sent out. And I thought, that doesn't sound right. I didn't hear it. I thought it was not. So I went to the laws written in California and I saw that no, law said that the California Relief Grant is not taxable in California and the expenses can be also deducted as expenses, right? So I know in California on a state level, it's not. Then I searched all through the IRS because the IRS was not stating that it was not taxable. They were saying it's seen as income, and I could not find anything as of this date to reverse that. And I went on one of this rather large known CPA companies, and they said that the California Relief Grant on a federal IRS is taxable. So as of right now, all I know is that on a state level, it is not considered income and the business deductions can be taken. But what I'm seeing so far on a federal side, that it is still considered as income. I haven't seen any fine print to reverse that. But like I said, I'm definitely out there to know if there's anybody that has more updated information on that. Okay. This is another one. I'm kind of staying on EIDL right now. I heard that maybe EIDL loan is going to be forgivable in part or full amount at any time. I heard other people like yourself ask that. I have not heard anything about it. And my personal opinion, remember, these are a lot of them, my personal opinion, because I don't have a crystal ball. I don't see this happening, guys. I really don't, because the PPP funds, oh, let me back up before I say that. Let me make this sentence. These funds that these government programs all come out of, in finance, we say buckets, the word buckets, but they come out of different buckets, meaning that Congress goes in and passes laws and legislation to allow these fundings to take place for these programs. The EIDL funding is set up more in a different type of program, similar to like FEMA loans, when there's a hurricane and your building gets, blown down, stuff like that. The PPP loans were set up for a different purpose for the COVID and were, considered to be forgivable from day one. I don't see they suddenly changing this because it's the way that you hear the word appropriations, right? It's the way the government appropriations are. So I have seen so many things happen in the last 2 years that I go, well, that's not going to happen. And then it is that I literally I'm to the point where could I see a unicorn walking down my street? Well, perhaps, that's kind of how I am. So I'm not going to say no, but in my belief, I think it's kind of close to the unicorn walking down my street. I don't see it being forgivable. Okay, guys. So really kind of look at it from the position that it's going to be a loan you have to pay back. And I always say, I like to make my decisions. I like to base my reality, my life on what I know to be true today. We do go into the future and we try to identify what possibly could, but you don't want to start making business plans. And if you have to look at something being forgiven to not pay back to make the business work, there's probably more inherent issues too. So it's never a good way to look at business structure and business planning on what ifs in those scenarios. So plan on the fact that you're going to have to pay that back. Yes, I'm sorry, I got to ask the question to you guys. Sometimes I think, I'll just answer the question. I forget I got to announce it too. Can I deduct expenses for a professional training program I took last year? The cost was almost $600. Yes, you can. There is certain qualifications that you have to make sure that training was specific to the company and the ability for the company to perform the services, etc. So you can actually look up and there's different criterias, and your CPA could probably, or EA could go through that criteria. I don't know all of them off the top of my head, but in general speaking, what it has to do with is they want to make sure that you don't take basket weaving, call it professional, development, and it really isn't about professional development. So there has to be a clear connection that training program was required within the company and is a part of a company expense. But in general, professional training programs that are engaged in the company, yes, they can be deducted. When you talk about putting a car in, okay, so this is it a good idea to put a car into my company name for depreciation if I use it mostly for business? Does the car title need to be in my business's name? So really what, it's more about how much you're using it for the business. So if you're buying a van And it's a van that could not. So IRS is really funny about this. It's like, you know, they identify, I think they had an example of an ambulance. You know, I'm not going to drive an ambulance to the grocery store on a daily basis or something like that. So it has to do, when you come up with type of vehicles, is that they cannot be used in a personal capacity. And so since you say mostly used, that makes it questionable at best. What you're going to be doing is you're going to be taking a certain percentage, and you'll take business miles, etc. So at the end of the day, in your situation, it's probably just much cleaner just to take all the deductions for your car as a percentage of usage. And I talk a lot about that as a percentage of usage on things, that's what it would be required. Okay, so I don't know in that case if that would qualify as a business vehicle fully and wholly for the business. Okay. SBA told me EIDL loans max at 150 for small business. Is this true? You know, I'm trying to remember on my database, guys, because I have so much in, but I don't believe it is. I think we went up to 300,000, but I'm going to tell you straight up, my head gets so many numbers, sometimes I forget. The 150,000 was where they went up to and allowed certain companies to borrow depending on the underwriting. So I don't think that there was a 150 for small business. It's more has to do with the underwriting capability of how much the loan structure can have. So I'm answering that with a partial. I'm trying to remember, but I don't see it being 150. I think it went up a little bit higher, but once again, the underwriting has a whole lot to do with it. But nevertheless, the best thing to do is, I'm sure that's being asked on whether you can get an increase. I would still apply for the increase. I have with companies that were over 150,000. So the key is to just apply for an increase and see if you can get one. Okay. So with that, I've gone through a surge of the questions. I am going to go into another interesting arena of discussion. So let me move some little things around here. Okay, just a second, because I'm playing like major things. Okay, guys, you ready for this part? So what we're going to do, let me get this up. Lauren, you tell me if they're not seeing an Excel document at any point, okay?
Will do.
Excellent. So this is something I put together, and it's, you know, I always try to explain something really, really simple. And I always try to also address these things, what you must know. You should at least know this. You should at least know this, right? So I'm going to go through this one process, and I'm going to tell you 4 questions. 4 questions. Every single business owner should know. Every business owner should know the answer to these 4 questions. I don't care if you're knitting doggy sweaters and selling them at the flea market. I don't care if you're babysitting. I don't care what you're doing. Anybody who claims themselves to be a business owner must know the answer to these 4 questions, guys. I've done it simple, very, very simple. And what I'm going to do is in some upcoming, I'm going to play on this to take it a little bit further. So right now, I'm just going to tell you the 4 questions. And I would, just because of me being finance, I would think every business owner can answer these 4 questions. And what I found, it's not true. Of course, when you get into the larger companies, all business owners answer these 4 questions, and they deal with them on a daily basis. But what I find within the small business, they don't. And I really want to urge everybody to think of the answer to these 4 questions in your company. So the first question, how much does it cost to produce my product or service? Okay. If it's a product, you consider raw material, purchases, like if you're buying and reselling. You consider labor that's directly related to the production of the product or service. You consider shipping in, guys, see I wrote in, meaning if you have to like take raw material and ship it to your company, not shipping out to customers. I said in, shipping in. Packaging, if you have packaging on your product. So what I'm saying, and we're not dealing with right now accounting for taxes. I'm not dealing with any kind of how you should set up QuickBooks. I'm talking back of the envelope, back of the Excel sheet. I'm going to arrange numbers the way I want to arrange the numbers for what's called managerial accounting. In other words, to make decisions within my company. So there's financial accounting, that's arranging numbers in a way to make sure I produce an income statement, a balance sheet, a bank account, or banker can look at it. For taxes, the IRS. Then there's managerial accounting that doesn't follow rigid guidelines of where I have to put numbers, so I can align them so I can make a decision in my company. So what I'm speaking of here is managerial accounting. I use this really silly little examples just to show you what I'm talking about. I really wanted to communicate it, but I am big on trying to see if I listen to myself without seeing something and I didn't know what I was talking about, would I understand it? And then I always create these little things that say, how can this help somebody see it and hear me to know what I'm saying? So when I say, what does it cost to produce my product or service? I don't care. I use Excel because I just like Excel. I use it like a piece of paper, as you can see, but it could be, as I always tell you guys, it could be a crayon and a piece of paper. I don't care. But you write down and you figure out your product and you figure out, okay, widget A, I got widget A. Maybe it costs me $5 to make my widget A. Maybe I'm making a chair, $5 wood. Maybe I'm knitting my kitty sweaters I always talk about. Well, then I need the yarn. It doesn't matter, the raw material. Say I am buying something from somebody and reselling it, you know, a distributor, then it's how much do I have to pay to buy the one product. If I'm selling earrings on Etsy and I'm making them, it's the materials to make the earrings. If I'm buying earrings from another company and reselling on Etsy, it's the amount I had to pay to buy the earring. That's what I mean, raw material, whether you're a distributor or you're making it. Labor, if even I am making it, if I'm making it, I want to consider what would be the average hourly rate that I would pay somebody else to make it. So say that I'm making some jewelry and I'm making numbers up, guys, I don't know these numbers. So say I'm paying somebody, if I had to pay somebody to make this jewelry, you know, they get 20 an hour. I'm not going to say I'm going to take and be able to make a earring. I'll make, you know, 4 per hour, I'll say, right? And so then I'll divide 20 by 4 to figure out how much it's costing me to make that earring. I'm not going to say, well, I'm a CEO, I'm going to get paid 120 an hour to make an earring. So I'm going to look at whatever I'm making, the amount of money I would pay somebody else to make it and how many I can make in that hour. Okay. So then I can say, well, maybe it costs me $5 in labor or $8 in labor. So I'm literally saying, okay, this is how much it takes in time to make the one widget, and this is how much I'm paying. Now, if you're, I'll use a restaurant, for example, if you're a restaurant and you have a bunch of dishes, I might allocate and say, well, how much does it take to make this specific dish versus this specific dish? If it's a bigger company, I'll use average. On average, what does it cost to make this versus that? Say I was a restaurant and I'm making up stuff to communicate. I sell steak at a higher amount than I sell a hamburger. I might go, well, this is how much it costs to make a steak. This is how much it costs to make a hamburger. So it's, if you have just 1 or 2 products, it's very easy to do this. If you have a whole menu of products, I'll say that you just start using averages and you use estimates. There's no reason to not know how much it costs to make a product. There's our service. I'm going to get into service in a minute. I have been meeting with a couple clients this week that have already invested in a brick and mortar. They got you know, different kind of restaurants or things that sell products, and they don't know this number, and this number is so crucial. So number 1 is, how much does it cost to produce my products or service? If it's a service business, consider your own billable time if you're doing it. Like for me as a consultant, I could say, well, how much does it cost me? How much would I want to get paid an hour if I was working for someone else? Or how much what do I get paid per hour? What's the going rate for that per hour? So I'm considering my own billable time. I'm putting something into the cost of this, or what's the minimum I would have to get paid to cover my bills. There's a million ways to look at this. And when I do analysis with clients, I get really deep into the business model, and I use not only finance, but I'm also a big user of statistics and statistical probability. To be able, and estimates and percentages. So I go all into different ways to to analyze this. Typically I'll have somebody say, well, you can't. I'm like, yes, you can. Okay, you can't. And I always debunk those myths. Well, you're a startup, you can't predict this stuff. Yes, it's more important. It's your own money. You got to. Well, I got so many you can't predict. Yes, you can use estimates. Well, it doesn't always happen the same way. Yes, you use statistical probability. So there's a million ways to do this. I'm a service company and it's only me. Well, then you figure your billable hour. But there's always a way. So this is number one. You must know how much it costs to produce your product or service. Question number two, how much does it cost to run the company month and year? This I needed to get rid of here. I just made this, so let's get that out of there right now. So this is what you want to do, is you want to consider the cost that you're paying for, even personally. Like if you're working out of your home, you want to at least put a placeholder in there to consider that you're using it. If you create financial projections or startup forecasting or even ongoing forecasting for your company, and you use the numbers and you create it where you say, I'm going to use my own computer, I'm going to use my own place, I'm not going to put in any of the costs for this, and I'm not going to pay myself because I got to make it somewhere before I pay myself. Trust me, you're going to create a company where you're always going to have to use your own equipment. You're never going to have money to pay for the rent you use, and you're never going to be able to pay yourself. This is like one of my huge issues I have with a lot of people with speaking to entrepreneurs. They go, oh, well, you'll be able to pay yourself down the road. Down the road will never come if your cost structure doesn't allow it. In fact, another one of my little lessons I'm going to give down my road is why you can't often increase your sales. You can't sell yourself out of losses. You can't sell yourself by selling more quantities into profitability. And I'll get into that in another one of them. So what I'm saying is you consider all costs. Remember, this is managerial accounting. I'm looking at it from managing internal cost. I'm not saying, well, I'm going to take off this X percentage on my taxes or rent. I'm looking at it to make sure we fully understand your cost. So what you want to do is you want to consider, what is your overhead per month? What is your overhead per year? I just divided by 12. These are just small numbers just to show you what I'm talking about. And I might use percentages or use an estimate. I might say, well, I pay for my cell phone and I use 50% in the business, so I'm going to use 50% of this number. I use this much in my rent, I'm going to put this number in. You can use percentages. Once again, these are all estimates, but you must know how much it costs to run your company. Question number 3. What is the gross margin for each product or service? Oh my God, you've got to know this, guys. And so many people don't know this. They get it off their income statement. It's not correct on income statements because we are reporting on a cash basis. You might report the products sold, but you might have bought a bunch of cost of goods and these numbers aren't aligned. So the income statement's not going to tell you this. You must get into a separate document. Like I said, crayon, pencil, doesn't matter, or in Excel, I don't care, but you have to know this. So in my little, just to communicate, that's all this is to communicate. All I'm saying is, say I had product A, I sell it for $15. It cost me $10, all made up numbers, right? All I did was subtract 15 minus 10 is 5, okay? And then what I did is I divided 5 into 15 and turned it into a percentage to know my margin is 33%. This is so important because what it's telling me is that I have 33% is my gross profit margin. It's costing me 33%. I have 33% that it's cost me to produce. That means that the rest is left over to pay expenses. These are really good, important percentages. And as I go into the next training on this, I'm going to show you how you use these percentages, but it's so important to know. Now, in my made up example, made up numbers just thrown in here, my selling price in this case, product B, is 20. My cost of goods is 5, my gross margin is 15, and my gross margin percent is 75. So you can see that I have more money left over to pay expenses when I sell product B than I have when I sell product A, okay? So these percentages start you to have an understanding of which products are more profitable for you, okay? And I like to use this as an example with people. Have you ever had a product that you use from a big company? I always use the example of soap. and you use a soap and you go, oh my God, this soap is so great. It's the best soap ever. And then the company discontinues and you're the expert. You're like, that company doesn't know what they're doing. The marketing department's crazy. Everybody loves this soap. Why did they discontinue it? That's a stupid decision. Well, they discontinued it possibly because someone in the CFO role looked at it and said, this is not giving us enough profit. It's bringing us down. So many times when I work with companies that are even profitable, and I got to the point in my life, I can look at numbers and they kind of tell me things. My gut picks up things before I even know the analysis. It's just, I get this feeling I got to go down this road. And I had this happen so many times, I can't even tell you now over my long career as a consultant, where I would go, I need to dig down and look at the gross margin percentages on all these. I need to understand what each one is. And I find that they're selling all of this to get up to this profit margin, but then they're selling this product and it's bringing them down. I can't tell you the number of times my solution was discontinue that product right away and you'll be profitable. You know, another expression I use, you don't want to be more tired and more broke. Okay. Sometimes people just put their head down and they keep doing the same thing, but they're literally digging themselves in a hole deeper and deeper and deeper. So you've got to know the gross margin percentage of each of the products, or once again, estimates, categories. You can play with this. It's not like you can't do it. You can't give me a company that I can't turn into these numbers by using estimates or some kind of averages. So question number 4 comes, how many units do you expect to sell per month or year? This is where you start forecasting, but you don't forecast sales. I hate when people go, well, I'm going to have 10,000 in sales and then I'm going to have 10% increase. Life doesn't work that way, guys. It doesn't just do 10% increase. I see people fill out these forecasts from these templates online, and you know I hate templates. It has no logic behind it. It's just like, okay, I'm going to increase this, I'm going to increase this, I'm going to increase this by this percentage, and they make no sense. I can look at them immediately and see there's no logic, no sound reasoning behind them. At one point in time, I sat on an advisory panel for an investment bank. I've been a banker before, I think, for some of you guys that don't know that. So I have that background. And I was the one that would kind of inspect the numbers to see if they felt as though the management team knew what they were doing in the forecast. And I could look at it immediately and tell that they just plugged in numbers because there was no logic in the relationship between the numbers. And this is what happens when you just throw numbers in and I'm going to increase this 10% a year. I'm going to increase this. It doesn't work that way, guys. That's a sloppy way to do it. And I can guarantee big companies and people who know what they're doing, they don't do it that way. Okay. So you want to drill down, you want to get to the basic core elements and look at a sale. So in this case, what I did is I said, okay, all I did was I added to this and say, in month 1, I'm going to sell 120 units. In month 2, I'm going to sell 110 units. And then I took it and said, I'm going to sell 500 units, right? So that's all I'm doing is I'm saying units. All these numbers are made up. They may not even make sense, guys. They're just made up numbers, okay? So in this one, I'm saying $20 is my selling price. $5 is my cost of goods, and I'm selling 50 units, and I'm selling 20 units, and I'm selling 250 units. So immediately, and if anybody wants to you know, put this into the Q&A as a statement, which one am I selling more units? I mean, what would you be excited about? Product A, which one looks like it has the higher demand? What's the real exciting thing here? Which one do you want? So I have everybody turns around and says, product A selling 500 units. That's twice as many. So we need to go after product A. We're going to sell a ton more product A. We're going to invest in marketing and product A. We're going to push product A. And this is why I'm saying more tired and more broke. Okay, guys, look at, let's say 500 units times 15 selling price, 7,500 revenue. 250 units times 20 selling price. We got 5,000. Okay. We take the cost of goods. All I did, 500 units times 10. Yep, somebody's onto this. I can see right now, Star, you're onto this. Okay, if I take, let me slow down again and go back. So I got 5,000 cost of goods. All I did was say cost of goods 10 times 500, the unit. Cost of goods 5 times 250, the unit, 1,250, and I subtracted 7,500, sorry, minus 5,000 is 2,500. 5,000 minus 1,250 is 3,750. This is the money I have left over to pay for expenses. I am better off selling 250 of product A or product B. So sorry, scratch that, product B, than I am 500 of product A. Okay. Now, here, guys, listen, that doesn't mean I'm saying don't sell product A. I'm not saying that. But what I'm saying is when you look at this information, and this is what I tell people all the time, when you look at this data, you don't conclude anything from this. This is the key. This is the most important thing about these simple things I'm showing you. This is CFO thinking. This is where the discussion begins. This is where the analysis begins. This is when you think about demand. This is when you think about market. This is when you think about production capacity. You don't make decisions based on customers and demand. I know the people out there in sales and marketing are just cringing with me saying this. I know this. But guys, I've had to go through bankruptcy with clients over the years. I've been a consultant for 30 years. I'm in finance, obviously I did. Never went through one that didn't have sales. They all had sales. They weren't selling at an amount. And here's the thing, guys, you've got to be able to sell your product at an amount, a high enough selling price where it covers the cost to produce, it covers the cost for the expenses, and it leaves money left over for owner and reinvestment for the company. Otherwise, I don't care how many people want your product. I don't care if it's on Oprah and you are a success overnight in revenue. It is how much is left over at the end of the day. It is net income. So this is very important to know. This is where the conversation begins. Do you need to sell some product A to get people into the store to sell product B? Can you increase the selling price? Can you do some bundling? Can you make sure that you have some other aspect about it? This is where you have what if, what if, what if, what if. But you constantly go back to the financial analysis of this. And this question number 4 is showing you that when I came over here on question number 3, I started seeing clues that would clue me into what question number 4 will be. I still am not looking at the full picture here. This is not the end, okay, guys? These were 4 questions. This analysis would go into what percentage of my revenue is cost, what percentage is this? And I would go on and ask many more questions. I'm just getting you started with the top 4. Understand these top 4, and then I'll be back at you in a session down the road where I'll pick up these top 4 questions and we'll go from there. But I guess that old expression, if one could stand on a soapbox, you know, we used to say that years ago. The millennials don't know what I'm talking about, but if I could stand from a mountain and if I could scream at the top of my lungs to one thing, to all small businesses, I would be screaming about these 4 questions beginning the conversation. And my information about this comes from the fact that I grew up in the country. Everybody had small businesses. You know, we had the individual person who had the tire shop on the corner. We had dairy farms. They knew how much it cost. They knew how much they were making. They knew. They didn't have sophisticated QuickBooks. They didn't have any of this, but they knew whether they were making money or not. And so I always came from an understanding. Even when I worked on the farm, I knew how much it cost to, you know, pick a bushel of beans. I knew this stuff, right? And then, you know, going into the small business myself, it was a more complicated business model. You know, I was offering services and products and stuff. So I didn't know how to get back to this basics, this basic information. Then, you know, fast forward, banker, CFO, bigger companies, understanding all this. So now what I'm doing is I'm trying to come back to the small companies and I'm trying to say, hey guys, let's go back to basics. Let me teach you some minor, simple CFO tricks. I'm not teaching you the big complicated. If you looked at some of my spreadsheets, you go, oh my God, I'm scared. I'm just showing you the really, really, really small things, right? So in that, I'm saying, know these 4 things. We'll come back at another date and talk about where they go from there, but at the least know these 4 things. So as always, I hope that this session was beneficial to you. Thank you to those that put in the questions in the chat. Thank you so much to the people that send in questions ahead of time. We're going to go back to Lauren in a second. She's going to repeat again how to get in touch with me, how to send more questions. And I probably within the next couple sessions or so, I'm going to come back back and I'm going to play on, after you know these 4 questions, where do you go from here? What do you want to do next? So guys, maybe get those 4 questions, put them in your back pocket, join me every week. I love to have everybody on the session. You know, it is my goal that, you know, at the end of the day, everybody talks about, well, my business needs to be successful, etc. This is an expression that I've used for years. And those who know me and worked with me, they've probably heard me say it before. At the end of the day, you need to be able to buy a quart of milk. If you can't buy a quart of milk, you can't feed your family, you can't feed yourself, you're not happy, okay? So being in business is about having a passion. It's about all of those things you hear on those entrepreneurship programs. I'm not against any of that, but come back and let's talk about the financials, because you've got to be able to buy a quart of milk at the end of the day, or you're more tired or more broke. And another thing I always say, then you should just go to the beach, okay? So with that, Lauren, I'm sending it back to you, but a warm, hearted thank you to everybody that joined today and continue to do so. And please come for next week with a really interesting interview. Lauren?
Lori, oh my goodness. Thank you so much for today. It was so good. Cheryl is saying, I need a replay of this. Tova says, thank you. This was so helpful. Christine, thank you for answering our question. Star, thank you. I mean, the chat is just going crazy right now. Irene,
Thank you, Lauren, for sharing that. I don't see the chat, so I don't ever know that. I just kind of am up here chatting away and everything. So that warms my heart. Thank you guys for putting that in. Lauren does send me the chat afterwards, by the way, so I get a chance to look at it. And that's what I do. I get up, I have a cup of coffee, and I look at the chat, and it just makes me smile. So thank you, Lauren, for telling me that. While I can still say thank you to everybody who's writing it.
Oh yeah, and I was just gonna say this, but Jennifer says, you are amazing, Lori. Thank you so much. And Lori, you are amazing. The information that you've provided today and every day on our show has just been so beneficial and just so good. So thank you again to you. Thank you to our frequent flyers, as well as those who are new with us today. Thank you for coming. Please be sure to tell your friends and even colleagues to join us. Join us every Wednesday, 10 a.m. Right here. It's for Small Biz Talk, solutions for your small business. Again, I will hang back, or I'll hang on a little bit so that everyone can collect my email address to get in contact, Lori. I am going to reinsert our welcome message, and that's going to have a link to our submission form. On that form, you can add any questions that you would like to get addressed by Lori, as well as show topics. If you have any suggestions on any topics that we can cover, please submit them. It'll also have, you can check it now, it'll also have my email address, as well as our new client sign up form, as well as a link to our YouTube to see all of our past shows. So again, Lori, thank you. Thank you to all of you who've joined us, and have an amazing week.
Okay, bye everybody. See you next week.
I'm adding my email again right now. Oh, Jennifer. So Marty, I see, can we save the chat? If you send me an email, I'll see if I can't get it over to you. Or let me know, Marty, specifically what you're looking for, so I can get that information over to you. Let's see, Jennifer, when is a good time to call? You can call our centers at any time. And if we don't get you that business day, we'll get to you the next business day. Email works 24/7. For Florence, you're saying, how do we get a recorded session? I just listed a link to our YouTube, and that's where you can see all of our past sessions. I'm going to add it to the chat again right now. Also note that there will be a recap email that goes out at the end of this week. Marty, I see you saying thank you. Jennifer, thank you. Tova, thank you. All right, everyone, thank you so much. Looking forward to seeing you all. Ray, I'm glad it was very helpful. Cheryl, I see you. Oh, good. Yes, please head over to YouTube. And you guys were always here, so please reach out. And we're here every Wednesday, 10 a.m. We look forward to seeing you. Thank you. Have an amazing week.